What's up, you guys? Welcome back to the channel. My name is Ryan Mayo. I make videos about politics, I make videos about finance, I make videos about stocks. Today's video is going to be an update on our investment challenge for 2021. I'm going to give you an update on some things that have been going on in the crypto space, particularly with Ethereum, ETH, give you an update on that play. And I'm also going to talk a little bit about what the Biden administration means for the market, what kind of plays we're going to make based on some of the policies that have been put forth, and what direction that I think things are going to be going in. Alright, you guys, first and foremost, we're going to have an update on our investment challenge for 2021. As you guys know, we started the year out with a clean slate of $3,000. We made our plays, and now we're watching the money grow. So far this year, we are up about 7%. We're up hovering around the $3,600 area. It's been a very volatile market for the plays that I've made so far this year. The highest performing stock that I have so far is a tried and true one. It's Tesla, which of course for the month now we have up over 11%. That's been a very good performer. Some of the other plays we made are still kind of hovering around where they were towards the end of the year. They're definitely all in profit, but we're waiting for them to pop. The Tattooed Chef, which is a play long-term that I've been a very big proponent of, that is doing pretty well, starting to inch back up to its highs. And I expect that it will break its resistance and soar in the near future. So that's a play for you guys to keep an eye on. But so far, so good with regards to the challenge. If you told me before the year that we'd make a few $100 every week to begin the year, if I could do that all year, I mean, that would be my investment dream. I don't expect that. I expect things to go up. I expect things to go down. But the main thing that I try to teach you guys is that research your plays, right? Have your game plan and your strategy for your short-term and your long-term plays, and then stick to it. See it out. If you need to hop out because it's not working the way you thought it was, that's okay. But don't hop out too early because you have FOMO, because you're chasing other plays, or because you're afraid to lose money. You haven't lost a dime until you pull out that loss and solidify that that was in fact a loss. So one of the things that I like to tell people is not just the smart things or plays that I may have made, but the mistakes I've made. All of my major mistakes are by selling too soon, not trusting in the evidence and the information that I have, and not being patient and wanting to move to other plays because I see those things are swinging up. And when a play swung up too far, you might find that you're actually buying at the high point and it has no other place to go but down. So be very careful with that. Stay disciplined in your decision making, and you will have a great year. There's a lot of uncertainty, of course, this year, and a lot of things to be weary of and things to keep an eye on. And I would recommend, one of my biggest recommendations for this year is pay attention to the market as much as you can. Of course, you guys have jobs, you got things you got to do with your family, with your friends, and all those things, and I have those things as well, but I'm keeping a really close eye on the market. I'm getting more information than ever to try to remain educated, so I can try, if I can, to stay even a small step or a small inch ahead of the average investor. You don't have to beat the market, you don't have to beat the experts. You've got to beat your peers, and that involves information, that involves discipline, and that involves, dedication to what we're doing here. And that's really what it's all about. So you guys, I wanted to give you an update on some of the crypto comings and goings that I've been following. Of course, I did a video where I touched a little bit about on Bitcoin, a little bit about Ethereum. So one of the great things about Bitcoin is Bitcoin is king, right? There's no longer an argument that this is some sort of fad, or that it's going away, or that it's not a valid currency in the marketplace, in the global marketplace. I think that's very clear now. But Bitcoin, in many ways, is digital gold, and like real gold, it's out of the reach of a lot of average working class Americans. So that kind of lends my attention to Ethereum and ETH, that I think is a lot more reasonable. And there is a lot of reason to believe that ETH is on the very same path that Bitcoin was on. Now, of course, I'm not dumb. I'm not saying that these two things are the same, but they behave the same, is what I'm saying. And it's not just me. One of the things that's cool about ETH is it's one of only 4 cryptocurrencies that PayPal offers. PayPal has 350 million users and growing, but ETH only has 150 million tokens available. So even if everyone on PayPal wanted to buy a token of ETH, there's not enough supply to go around. And that's one of the things that really has helped Bitcoin, is having that limited supply. Now, Bitcoin and ETH don't have the same type of constraints on their supply. There's going to be a lot more ETH to go around than there's ever going to be Bitcoin, and that gives Bitcoin the advantage for now, but it gives them the distinct advantage. So a lot of investors kind of think that, well, just like MySpace and Facebook. When Facebook became king, MySpace was out of business. When, Google became king, or these other telecom companies became king, the AOLs of the world disappeared. And there is some truth to that, but I think cryptocurrency operates a little differently than that. I was looking at a lot of the information that the investor, former hedge fund leader Raoul Pal of Goldman Sachs in London, has been talking about. He really believes that ETH can reach 15,000 this cycle, which I found to be very interesting. He believes that Bitcoin and Ethereum are basically the same, and they're following what's called Metcalfe's law. Metcalfe's law is a principle from the .com era, and basically it states that the effect of a telecommunication network is proportional to the square of the number of connected users. So if you can see on the diagram that we have here, if you've got 2 connected telephones, you've got 1 connection. But when you have 5 connected telephones, now you have 10 connections. By the time you get to 12 connected telephones, you have 66 connections. So basically it's a law of proportional growth. And that applies, at least according to Raoul Pal and others, to Ethereum, and that this is going to grow. This is, as you can see from some of the other information and some of the other graphs that I'm showing here now, that it is tracking exactly the same, but 5 years behind where Bitcoin is. So Bitcoin's where it is now, but take Bitcoin back 5 years ago, and it's almost identical to where Ethereum is now. So if you follow that principle, right, and this isn't scientifically perfect, it's a hunch, it's an educated guess, which is what we do as investors. We get the information, we make educated guesses. But if you can surmise that it is following the same trajectory as Bitcoin, and go ahead and take a look. If you look when Ethereum is surging, Bitcoin is surging. If you look at when Ethereum is collapsing, Bitcoin is collapsing. It is following the same story as Bitcoin. And that's what many investors believe, and that's what I'm seeing when I'm looking at data and I'm looking at information as well. And I get it. I do not sell Bitcoin. I do not trade it to people. I have no financial need to boast or be one of those big Bitcoin or those big Ethereum people that annoy everyone. I've only got like a handful of people I'll ever talk about cryptocurrencies with, because there's so many people that are just crazy evangelists, and it's crazy annoying, and I totally understand, and that's not where I'm going. What I want to do with the channel and with this video is to educate you, because I'm sure you're hearing about it, give you my honest opinion with the research I've done, and then let you go out and decide for yourself, go out and educate yourself and do what's best for you in your investment journey, right? That's all I'm trying to do here. You guys got to make your decisions for yourself, but what I'm saying is that I don't think Ethereum is a fad. I think this actually really does have an opportunity to make you credible amounts of money. And I think, if you want to look and research a little bit more into what Raoul Pal is saying, I've got some information here that I've been showing you that I think is really important. As you look, you'll also notice that the market cap for ETH is growing actually faster than Bitcoin at the same point, as you can see on the graph I have here. And from its first million active addresses, it's actually proportionally growing a little faster. And those are the things that Raoul was pointing to when he decided to put 20% of his portfolio into ETH. He's still big on Bitcoin. He's still bigger on Bitcoin than ETH, but he does think, and I do think, that this is a viable cryptocurrency moving forward. And I think that you have Bitcoin up here. You've got ETH far below, but still strong. And then every other crypto is lower. And it doesn't mean those cryptos won't be viable. It just means they've got work to do. They've got to solidify themselves in the marketplace. Creating a currency out of whole cloth is not something that's easy. It's not something that happens overnight. It's something that you have to be patient with. It has to be built right. And I would absolutely caution you to be very cautious in the crypto space. Do double, triple, quadruple homework. If you think it's hard to guess where Tesla's going to go, and that's an established company that we know is going to be successful in the future, understand, of course, that ETH, that Bitcoin, that any of these coins are far more volatile, and there may always be far more volatile. But the Fed is taking notice of these cryptocurrencies. Other Federal Reserves and banks are taking notice of these currencies around the world. And I believe at least a few of them are going to solidify themselves and be here to stay. And I'm betting, and I'm putting my money where my mouth is on this, that ETH is going to be one of them. It may never be Bitcoin. Some, including Raoul Pal, think it could actually surpass the market cap of Bitcoin. I don't know. That's a little beyond my skill set. I'm still learning about that. But it's just something to keep an eye on and something to consider as a hedge if you think the market may collapse, if you think that inflation may hit, if you think the Fed's spending too much money and it's a time bomb. I'm not convinced necessarily that either of those things are true yet. I need more information. I need to see what's going on. But if you do think those things are true, smart money will head towards cryptocurrencies. And I think that's something for us to keep monitoring. And that's something that I'll keep doing videos about and sharing information about and keeping the open lines of communication going with you guys about. All right, you guys, now I want to take a couple minutes to speak about what I think the effect the Biden administration is going to have on the markets, if any at all. First and foremost, I think it's starting to be very well established that the markets don't really care who's president, right? The president comes in, he sets forth his policies, the markets will react to it, they'll reallocate funds, they'll reallocate investments, make different decisions based on who's president, but they're still going to try to make money in the market. What's moving markets up and down is what's happening in the economy as a whole. So to make things simple, if Biden can tackle this vaccine situation, if he can tackle that successfully, if he can open up the economy for Americans, get them traveling again, get them going to the movies, spending money, the market's going to love that. That's going to benefit the market. That's going to make a lot of people a lot of money. That's going to get the engine of the economy moving again. I mean, you guys remember, this is an economy that is 70% consumer spending, period, end of story. If people aren't spending money, the economy's not moving. And that's why getting stimulus checks to normal people who don't hoard the money, can't save the money, and actually have to go out and spend it, is not a bad idea. As long as those people don't have to take that, stimulus tech and immediately give it to rent, if they can actually get it into the actual economy as actual spending, then you get actual stimulus. I think a better name for the checks so far have been survival checks, because it's not really enough money to stimulate the economy, and it's going to take a lot more to have the effect that you actually look for. But I think the government, the previous Trump administration and the Biden administration so far have been trying to do a pretty good job of getting money into the marketplace. I just think, because to be frank, our leaders are very old, and they're using a very old rule book that doesn't necessarily apply anymore, and the numbers that you need to use need to be higher. I think the last stimulus package was $900 billion. You need trillions. You need 2 trillion. You need 3 trillion. You need to be very aggressive about how you stimulate this economy, or it is going to drop. So I think so far so good. I heard the new Fed chair, Janet Yellen, who's running federal treasury policy, the new Treasury Secretary, Janet Yellen, say that she does think that capital gains and other taxes will be raised, but she doesn't necessarily see that in the first year. She wants to get past coronavirus before that, and I think that's a good news for the market. Not that the market wouldn't bounce back or behave well, but usually when there's some constraint on capital, there's an initial reaction to that. If you look historically, it hasn't really dampened the stock market. Reagan raised taxes a couple times. Bush George H.W. Bush, the father, raised taxes. There was a slight recession after that, and then there was a boom. One of the biggest booms we've ever had in the country's history in the 90s. Bill Clinton had one of the largest tax increases ever, and there was a boom. Barack Obama raised taxes, and the economy continued to grow. So I think there's an immediate reaction, but that isn't necessarily indicative of what's going to happen to the market long term. And I think for us as savvy investors, we don't see anything as good or bad. We see these decisions as information that we compute and use to move forward and to make better decisions with our investments. And that's really what it is. So what we want to do on this channel is we want to monitor what the Biden administration is doing from a policy standpoint. We want to see how that affects markets we may be interested in and plays we may want to make. And then we're going to react to those, and we're going to make those plays, and we're going to be aggressive all year long, whether it's feast or famine. If we are intelligent, we're going to make money off of it. And that's all I have for you guys today. I hope you appreciate the video. If you like what you saw, please smash that like button. And if you'd like to see more, please subscribe to the channel. Once again, my name is Ryan Mayo. Always remember, when they are running, we are gunning. And I am out, my friends.